Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2, we're diving into smart DeFi investment strategies, how to earn, manage risks, and spot legit opportunities in this fast-moving world. Assessing tokenomics and utility. A token without real use is just hype. When reviewing a DeFi project's tokenomics, ask, supply and distribution. Is most of the supply held by insiders, or is it fairly distributed? Too much concentration can lead to price manipulation. Inflation rate. Are new tokens flooding the market? High inflation can crush long-term value. Burn mechanisms. Does the protocol destroy tokens to reduce supply? This can counter inflation. Real utility. Can the token be used for governance, staking, or fee discounts? If it's just a reward token, demand might dry up. Tokens tied to essential protocol functions have better staying power than those relying on speculation alone. Importance of security audits. Smart contracts handle money, so a single bug can wipe out funds. Always check. Audit history. Reputable firms should have reviewed the code. No audit? Walk away. Bug bounties. Protocols offering rewards for finding vulnerabilities take security seriously. Past exploits. Even audited protocols get hacked. Research if the team fixed past issues transparently. If a protocol cut corners on security, your investment could disappear overnight. Don't skip this step. Team and community trust. Behind every protocol are people. A vague or anonymous team raises red flags. Look for public profiles. Known developers with a track record inspire confidence. Community engagement. Active Discord or Telegram chats show real users care. Transparency. Regular updates and roadmaps signal commitment, not just hype. The best DeFi projects combine solid tech with real human accountability. If something feels off, trust your gut. By focusing on these areas, you'll spot strong protocols worth your time and avoid the ones that won't survive the next market cycle. Strategies for investing in DeFi protocols. DeFi investing isn't just about picking the right protocol. It's about how you manage your investments. Smart strategies can help you grow your portfolio while minimizing unnecessary risks. Here are 3 proven approaches to consider. Diversification across protocols. Putting all your money into one DeFi protocol is like betting everything on a single stock. Spread your investments across different platforms to reduce risk. Mix high-risk and stable options. Allocate part of your funds to established protocols and a smaller portion to newer, high-reward projects. Explore different DeFi sectors. Don't just stick to lending. Try liquidity pools, yield farming, or derivatives platforms to balance exposure. Watch for correlations. If multiple protocols rely on the same token, a price crash could hit all of them. Diversify underlying assets too. A diversified portfolio can weather downturns better than one tied to a single protocol's success. Dollar cost averaging in DeFi. Crypto markets move fast, and timing them is nearly impossible. Dollar cost averaging takes the guesswork out. Set a fixed investment schedule. Invest the same amount weekly or monthly, regardless of price swings. This smooths out volatility over time. Focus on long-term holds. DCA works best for tokens you believe in long-term, not quick flips. Use automated tools. Platforms often let you automate recurring buys. DCA removes emotion from investing and helps you accumulate assets at an average price, not just the peaks or dips. Staying informed and adaptive. DeFi changes daily. What works today might not work tomorrow. Keep learning to stay ahead. Follow key metrics. Track TVL, user growth, and transaction volumes for your chosen protocols. If numbers drop, investigate. Join community discussions. Discord and Telegram groups often signal shifts in sentiment before they hit headlines. Adapt to new trends. Be ready to shift strategies if market conditions change. Stubbornness can cost you. Staying informed doesn't mean reacting to every rumor. It means knowing enough to make calm, rational adjustments when needed. These strategies aren't guarantees, but they stack the odds in your favor. The best DeFi investors don't chase hype. They build smart, resilient portfolios. Future trends in DeFi investment. DeFi isn't slowing down, it's evolving. Staying ahead means watching where the space is heading next. From cross-chain connections to big money players entering the field, here's what could shape DeFi investing in the coming years. Cross-chain interoperability. Right now, many DeFi protocols live on separate blockchains. Moving assets between them can be clunky and expensive. Cross-chain interoperability fixes this by letting different blockchains communicate seamlessly. Protocols like Polkadot and Cosmos are already working on this. Here's why it matters for investors. More liquidity. Pooled liquidity across chains means deeper markets and better pricing, fewer barriers. No more wrapping tokens or paying high bridge fees. New opportunities. Investors can chase yields across multiple networks without getting stuck on one. Projects that solve interoperability issues could become the next big winners in DeFi. Institutional involvement in DeFi. Hedge funds, family offices, and even banks are starting to dip into DeFi. They bring deep pockets and a demand for stability, which could change how protocols operate. Look for these shifts as institutions step in. Better risk management tools. Expect more insurance options and safer yield products. Professional-grade interfaces. Clean dashboards and custody solutions will rise. Stricter compliance. Institutions need KYC and AML checks. Some protocols may add tiered access to attract them. This isn't just about whales moving in. It's about DeFi maturing into a system that works for both casual users and professional investors. Regulatory outlook. Governments are paying attention to DeFi, and regulation is coming. The big question isn't if, but how. Key areas to watch. Tax clarity. Clear rules on staking rewards, liquidity mining, and airdrops would help investors plan. Smart contract liability. Who's responsible if a protocol fails? Developers, users, or no one? Geographic differences. Some countries will embrace DeFi, others may restrict it. Location could dictate which protocols thrive. Regulation doesn't have to be a bad thing. Clear rules could reduce scams and bring more mainstream capital into the space. But investors should stay flexible. Policies will shift, and the best strategies will adapt. These trends aren't distant possibilities. They're unfolding now, and the protocols that adapt fastest will likely lead the next wave of DeFi growth. DeFi protocols offer a fresh way to earn, trade, and grow wealth without traditional gatekeepers. The potential for high yields, token appreciation, and financial control is real, but so are the risks. Smart contract bugs, market swings, and regulatory unknowns mean every investment requires research and caution. The best approach? Stay balanced. Diversify across protocols, keep up with trends, and only invest what you can afford to lose. DeFi moves fast, but patience and due diligence pay off. Ready to dive deeper? Join a DeFi community, test protocols with small amounts, and keep learning as the space evolves. The future of finance is being built now. Don't just watch. Get involved. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.